Good morning. It is Wednesday, February 26th, and we're going to start our prep today for the ES. Were you ready for the downside move yesterday as the insurance play was intact for consumer confidence? And we mentioned that yesterday on the morning video, and then it played out until 11:30 and we had a large rally. And are you paying attention to the weekly levels as well to understand the bigger turning points on the higher time frame? We're going to review those today as we review yesterday and get prepared for today. But first, just a quick reminder that derivatives trading is inherently risky and past performance is not indicative of future returns. So if we look at what happened yesterday, the market opened and we sold down mainly through initial balance, and then in E period at 11:30, we set our low of the day. And if we look at where that low of the day came into play, from our weekly levels, this was our lower target for the week at 59.22 from our weekly video we put out on our COT. And we failed the rotational level and went straight down. So from the open right down to our lower rotational, and now we're right back up. This is where we want to be paying attention to these higher time frames and to the other aspects of trading, not just the very short time frame that a lot of day traders focus on. And if we look at what happened in terms of our price action, we laid this out in our room that at 9:30 we were not over-insured for consumer confidence. And given how consumer sentiment and consumer confidence have been key catalysts the last couple of months, we want to start paying more attention to those. And we were looking for that insurance to come in, which would put that downward pressure in the market. And by 10 o'clock, we had that rise in insurance. But we don't just assume then that the market's going to go up. We have to watch for the other signs that the market is done, that demand is out. And if we look at where we are, we won't go over our actual numbers that we're looking at, but you can see we have two boxes here. We're at the low end of the third box. Well, by 10:30, we're at the upper end of the third box. So at 10:30, we're still seeing that demand come in, and we get this information real time, but we can put this out for our subscribers in our Discord room periodically throughout the day as these things come into play. And when do we start looking for a bottom in the market? And looking for those trigger signs to get long for that big rally is when we go from the top of that third box to the lower. And we see now that the demand is gone, and now the insurance providers will push the market back up to collect all the premium. And if we look at what happened, again, we bottomed at 11:30, right at our weekly level, and then straight back up for the rest of the day. And hopefully you were able to prepare for that and capitalize on it. And once we broke our line in the sand last week on Friday, the moves have been much larger and much cleaner. And that's what we're going to look to continue as we have been making our push now up to our line in the sand at 60.76. So if we look at our structure today, we have a $1 billion bid if we stay between 59.56 and 59.84. And even if we get a move outside of that, we still have a small bid, about $500 million up to 60.15, or if we do go down to our lower target again, yesterday's low at that 59.26 area. And so really where we get resistance coming in is this $4 billion sell that we would bring in at 60.45. And that is going to be near Friday's value area low and Monday's value area high. And that is where we will have a $4.8 billion sell from our systematics coming into the market. So that will start providing resistance as we make our push up to our line in the sand at the same area where we will be expecting our market makers to engage a little more aggressively. And that's what we're going to watch for today. In terms of key areas, we have our levels over here on the right-hand side for the day. And then we can see that we have $3 and $4 billion bids and offers between this 60.16, 59.66, and 59.15. So these are going to be the three big ones that we watch today as the areas that we will look for the market to stay contained inside. If we get out, then we can look for, again, cleaner price action and more of a trending move outside of that. We also, when we look at the volatility in the market, We have seen a rise in the VIX, and that happened yesterday as we pushed over that 18, close to 19 and 20 levels. And now we are coming back down. So we are going to be watching the VIX closely. We laid that out as well in the weekly video that commercials have been building a position long in the VIX. And that tells us that we are looking for a higher volatility regime. And on the yearly basis, that is all that we are seeing play out is this high volatility washing machine over and over and over again. And we can follow the money to see where that is coming into play and actually understanding where their position is. So if you're interested in learning how to do this, check out our courses that are coming up in March and have a great day trading, guys. Be sure to control your risk.